Hello everyone, I'm back. Realized that my mic was not on while I was talking because I had to do some new settings in my software. But this is AMC Entertainment Holdings Incorporated, COMCLA, currently trading at a possible 608. The bid is 614 and the ask is 617. Now, what you see here is a 3-year, 1-week chart on AMC. And what you also see is that there has been a closing of the gap from the high of 72.62 all the way down here to this low. Now, we can go back in time and see that technically this was even lower. So, in my opinion, is it possible for a squeeze to happen? Highly possible. Because just because the low was so very much low here, let's get a clear view of what that was. $1.91 when this was on January the 4th, 2021. And from that low, AMC did explode in price. Now, we also must take into consideration what was happening socially during this time. We have to take into consideration the politics of this time. We have to take into consideration all the various elements of stock market analysis, from Fed information to the pandemic to manipulation by various individuals, whether it be direct or indirect, so on and so forth. Nonetheless, there was a low of 191 on January the 4th, 2021, and a high of $20.39 on the 25th of January of 2021. It traded all the way down to 513 on February the 8th, and it continued on up from that point. We saw that the gap between the moving averages had gotten thinner, and eventually we see an uptrend happening with AMC over time. Then we have the occasional pullback, but they did attempt to get back up to these previous highs of $17.27 and of course the ultimate $20.39. It failed. It got to $12.58. It got to $14.42 and pulled back, but still a higher low because it didn't go back down to this low, this low, this low, or anything here. So again, we're still in an uptrend because we have this yellow line breaking above this blue line. And AMC continued on an uptrend for months at a time. It had here, let's see, can I pull it up here? One of the things that I've had a hard time doing was drawing various diagrams onto the Ameritrade because I don't double click first. But as you can see here, more so here, we had some consolidation. But we were still in an uptrend because, again, the yellow line was above the blue line for my moving averages that I have. So, truth be told, this could have broken back down to retest this low of 191. Or it could have broken up to take out this level of 1994, 2039. Could have taken out this level here at about 1725. Taking out this level here at 1455, and it did break out, and it continued to break out. And so what we have here is an uptrend that was basically happening here. Okay, so you have this breakout, and it broke out really quickly. It broke out very well. So essentially, these are some of the things people are probably paying attention to in the stock market. You see how the volume picked up here, and then we saw the volume fall down here, and then we saw the volume pick up here. And it has essentially dwindled down, but still there were purchases made, and then there were some sales going on. So we saw an attempt after a pullback here. The price did dip below this moving average line, but the moving average line did not dip below the blue. So we were still technically in somewhat of a bull market per se for this stock, but it was not a strong one. And you can see the volume was basically in a back and forth as well. Eventually, the momentum died out here, and this stock began to fall back, and it began to take out levels that it had gone past, and going down, and eventually we see the dwindling down of the price all the way down, continuously on. Some small attempts trying to get back high, but still overall the trend was going down. We saw a drop here on the 28th of February in 2022, and it traded down below that blue line, which more than likely officially solidified our downtrend. And we, of course, got here in these areas where price was breaking down, and it did go down pretty well. And I'm trying to see here if it actually got to a previous low completely, and it just doesn't appear that it did do that. It got to 379, if I'm not mistaken, but we all know the low back in the day was $1, I think, and 91 cents. So that is not what happened. It failed to go all the way down so far, but we still have to watch out about that last part of that gap that still kind of exists down there. Like I said, it did go down pretty low to 377, but as we go back in time, we still must take into consideration these lows here, that it's not going to get here and pull back, or it's not going to get up to here and pull back, or this is roughly what $5 and pull back. We have to make sure that it's not going to get in these areas and pull back. See, we're kind of right here near that 6, and it's true, it can pull back. And let's look at this. Okay, we're at 614, we're at 615. And the last time I got in this area in the past, and in 2020, it pulled back. Then we know when it got to that low 191, it broke it through. But we have to be careful that it doesn't do a pullback and then come back up. You see what I'm saying? That's my concern here. But like I said, we broke through. We're at 677, but you have some pulling back. You have this $6.08. So it did go up. We can't take that out, but we have to also look at how close this is to this area and how it pulled back, and it didn't really run up real quickly, And again, these are weekly candles, but you have to take in consideration, is this considered to be a double top, and is that why it pulled back to 608? Let's look at this on a 1-year chart with the days, so we can really kind of see what actually happened here. Okay, this is where we are, right? This is where we did our little markup on our higher time frame. Okay, and we're going to kind of zoom in here. Okay, we are here. Okay, we broke above So we broke above this area at 645. We broke above this area. 677. Okay, progress was made. I had a buy signal all the way here on January the 10th, and it kind of pulled back. But if you can see here, I don't have, a complete official crossover here. And that's not saying that that's not going to happen eventually. What I am saying is it's kind of dangerous in this area, and then it's not, because we still have technically an uptrend. Let me see. Can I attempt to draw this properly? Look at there. I already messed it up. All right. Let's just try it here. Double click here. We're technically in an uptrend if you were to look at it from that perspective, technically. But we also have to pay attention to this. We have to pay attention to that. We have to pay attention to all of this happening as well. But I even want to go a little lower. And let me try it this way. Let me try it. Let's do 9 months one day. Okay. Let's see it again. Let's get a little closer to what's happening here again. Okay. Still showing evidence that this could go again, clearly on the uptrend. I still haven't got my crossover. My volume and everything is saying, yes, this appears to be a buy, because all of this means for my settings, for information that I have pulled from other people's indicators, that the volume is showing that this is a possibility of a strong, decent buy. And this has been going on since January 12th to get into a buy position around $3.91. So someone could have, ridden this all the way up to 655. It pulled back, and then it's gotten up to here, and it's clearly pulled back. Now, go even a little lower, see what we can see. Again, just trying to, like I said, zoom into this and see, in my opinion, some of the danger. Again, we're going to keep saying this, because at the end, this is not financial advice. This is just my opinion, me analyzing various empirical data on the chart, okay, for a particular stock, in my opinion. I'm not your financial advisor. I don't tell you what to do, and you do as you wish with your own research. But this is not in my opinion, a run to the upside per se, but it still is, if some people may say, well, this is a little bear flag here, and you got this, going on, you might say, well, we got that happening, and then you could easily possibly have, this happen, where it just keeps on going somewhere in the universe. All of that is possible. It has all the possibilities of doing that, but you must proceed with caution. The truth is, this could happen spontaneously. We all know that volume can come in and just boom and make this explode. And we also can be in a situation where there is this over here where the stop loss is right here, and then there's this overage here, and as you saw, the price pulled back, from this area of $6.76 on, let's see, 2/4/23, and then we're pulling back. Now we got to go in here just a little bit more, and I'm gonna have to go to, let me see, can I do something else right quick just to kind of look at this again. We got that going on. Got a little window here. Could pull back to this 504. You just don't know. But let's just go ahead into the intraday. Let's do 10 days, and let's do 30 minutes. And this is, like I said, don't pay attention to all the jibber jabber on my chart, because I This is how I study charts, and you probably are not familiar with my various indicators, and a lot of people probably say she has too much, and they're probably right, but this is how I do reverse learning. So, nonetheless, here we had a high of 677, 2323 at 11:30 a.m. And as suspected, there was that pullback. Okay, can't get to it. Let me see. Can I may have to do 15 days just to see this. Okay, someone somewhere else would have said, "Hey, it's cool. That run up was true." And matter of fact, you could have got in down here and ran that up because this took out this area here and went even further down to here. And when it got to this area, what did it do? It ran, I had to mess up. It ran up, okay? It ran up here, and it ran up here. Actually went further. But what did it do similar to this? It pulled back. Now, it very well could go back to this area of 537. As we were looking at the chart, there was an area of about $5 where it could possibly knock out this area and maybe go to this 495. We don't know. Or it could just essentially stay in that uptrend as it is, but we must be careful about this little guy right here. We got to be careful right here. Let me see, can I do this better? We have to be careful about this part here where it appears that there's going to be a possible cross down. We don't know. It could very well be setting us up for a false breakdown, but it very well could be setting us up for, a possibility of it breaking up because we also see a little bit of consolidation here. Okay? So, but we still have to be mindful of these things. But just like it did in the past, there was a pullback. Okay? And there's a lot of things once you see, you can look at the chart that we were just looking at a while ago. And this is a circle I drew at the top where those 2 points met. And this is how much information appears on the smaller time frame, even on 30 minutes. Of course, if I went to just this one day, okay, if I just went to this one day, all right, on the 30-minute chart, you can even see it even more clear that this clearly got into an area from the past and it pulled back. And my settings essentially let me know that this was an area where this pullback. There's clearly an order block here. Okay. There's a possibility that this could have gone all the way to 603. And where did it go? To 602, 603. So it closed that gap. And again, consolidation. Is it going to break on down or go back and retest this area? Overall trend, we kind of trying to look at this and see, well, yeah, this is an area where it could continue on down and go back to that 5. And let me see, can I add, I really don't like putting this on my chart because it takes up so much space. And I don't know how slow my computer is going to be. And it's clearly showing me that it's going to be slow. I need more memory because I got all this stuff on my computer. Maybe I'll abort that and just ignore what I just said. I wanted to put my ATR targets up here, and I just should, but I have some targets up here. Anticipated level 615. They already kind of went there in its own little way. Nonetheless, it went back down to this area. There's an order block here at 5.9, and I'm trying to see if there are any other order blocks in the past. Let me just go ahead and try to put this up here. I'm gonna do my little special targets. Updated. And see, it's up here. So, alright, let me see what my chart does. It has the potential to be a disaster. maybe not this time. Let's see here. All right, so my little thing is telling me there's a possibility that how my settings are. And this could go down to 554, 555. This could go to 598. This could go to 587, so on and so forth. But we don't know that. If it does, and it happens in the, pre-market and the aftermarket, of course, the weekend trading or wherever, how that goes. If it does drop down to a low, where would it go? Let's look at the 5-minute chart here. And this is, again, giving you even more information. Again, most people cannot handle all of this stuff here. I'm just going to clear this drawing set so we can get some of that off the screen. And you can see I have a lot going on here, but this stuff I can understand. But you technically could have gotten in a put here. My little thing was telling me to get in a put here. But the past behavior of the stock, based on the evidence it presented, says that you probably needed to get in a possible put here, but you still have to wait sometimes. Not always. Sometimes you do have to wait. Some people do a break retest, and then some people just go ahead and get in, and if it does fail, they just cut the trade because they don't want to miss the possible downtrend. But you could have got in here. You could have got in here. You could have got in here when it broke through here. Of course, you could have got here when it broke through there, and so on and so forth. Of course, I feel like it would have been a little too late to get here unless you scalped and you had a bunch of positions to get in. A bunch of options that you did at one time to go from 626 to about 604. This depends. But nonetheless, this was showing me that this was pretty much going on a downtrend. My little stuff down here was telling me it was going on a downtrend. This was telling me basically it was going on a downtrend. This was telling me with the volume, this was going on a downtrend. So like I said, my pars buy sell indicator here kind of came in a little later. And I might, let me see, can I go in here and possibly, I don't know, that can go any further down. I don't think so. I'm gonna leave it alone. I'm gonna leave that setting alone. But nonetheless, for the most part, it's pretty much on point. But like I said, I went back in time. There was an order block here. If you go back in time, which is why it's important to go back in time, you can clearly see that there was a double top there where it was kind of sort of expected. This is letting me know there is a squeeze that was coming here. I'm trying to see were there any other instances of squeezes on my chart. I don't see it quite yet, but if this goes back up, I have a long target of 657, and I'm trying to see where my short target is. I don't see it. Maybe it's a little lower. There's a possibility it can go to 5.9. These are areas a little below, and let me just go back and see where this could go back to. Yeah, look, this is what I'm telling you. Now, you could have gotten in a call back on the 1st of February and rode this from about 524 all the way up to that high. But this is the problem with this particular chart, is that if this does not hold the areas here, it could break back down to here and then go back up, or again, it could just go back up, because again, this is still narrow. This could cross down here, or this could cross back up. That is why you are mentally being prepared that this could break down a little bit, or this could really run up. If you again go back in time, let's even do the daily, let's do 5 years on a month, okay? This is essentially showing you this thing has gone down. It has the potential to go up. And this is showing you what it could do. You see what I'm saying? But it also can tell you hey, I can go right here, and this is the problem. You can continue on up on that journey, or you can continue on back down to close that gap and break down. And guess what, you guys? This may not happen this month. It may not even happen this week, but it could happen. It could happen at any time it feels like it. You just have to keep an eye on it. I personally believe that if this continues to break down the way that it could, and I'm just going to go over one day again, 1 minute. You know, this could easily go back down since it already hit that 603. If it can keep going back up from that 603, I think there's an opportunity for it to retest that high of 672. And if it keeps going past that, then hey, I say go for it. Whatever you feel like doing. That's what I would do. To me, that would be a good thing. And let's kind of see what the fibs say, because some of you like to trade the fibs, and I like the Fibonacci, but the one that I got up here, it appears to take over my chart, and y'all already see I got all this stuff up here. But as you can see, this literally went from the high of 6.77, and it literally traded back towards where it started. And let's just go again. Let's look at this on a higher time frame, and that's why going to a higher time frame is very important. Okay, because you get to really see what's going on here. Okay, we got the fall back here. We had this high here of 72.62, and we slowly retraced back down to 23.6. We retraced back down to 38.2. We hit that 50 mark, and we was like, okay, what's gonna do? What's gonna do? Failed to get back up past that 38.2%. Went right back down, broke that level, broke the 61.8. At that point, most people would have been like, this is a reversal, but somebody might say at this level it was a reversal. Went down to 78.6, tried to get back up to that 50%, which was more, various tracings that happened. Still can't get back up to those high. Continued on down, did the same thing, couldn't handle it. Went on down all the way almost back to a 100% level here. And that's why we're saying, look, the 100% area for a complete retracement is 194. But we still, still waiting. Still waiting to see. Is it going to get to that 191? Or is it going to say, well, hey, the midpoint here, I'm trying to get back to that, and then I'm just going to try to get right here. Okay? And that's what it may try to do, you guys. But the thing we have to make sure is that we don't rush the process, because we don't know what it's going to really do. But it's true that it very well could do that, but we also see where it can, and this is negative. We know, I don't know, I don't see it happening, but you see, there was somewhere in the past something like this did happen. I don't really know what that would mean per se, you guys. I really don't know. But we're just gonna focus on 0.0 on up, okay? We don't want this stock to get all the way down to the bottom. Matter of fact, when earnings are on the 28th, okay? Earnings are on the 28th. Earnings are on the 28th. Now, earnings are on the 28th. Could it be, if these earnings are correct, could it be that before earnings, this is going to run up and then run back down? Or are they going to push it down almost to this $1.94 or to this 3 something it was at, and then the earnings could run it back up to that 20 or whatever? Like, you got to understand where we are. To me, like, let's think about this. Like, isn't it quite convenient for the squeeze to be happening near earnings? Isn't that something that you need to think about from a strategic point of view. And then now let's talk about AMC. We've had some blockbuster events happening in the entertainment industry, but have these stocks recovered enough to produce a profit and a positive outlook? Are they thinking about the future? Some of these productions have not been the best. Some of these partnerships have not been the best. There's been a lot of issues going on where we have streaming services taking the movies and putting them conveniently in the homes of individuals so they don't have to go to these areas and buy the popcorn, buy the soda, buy the candy. The whole entire industry could be hampered by the convenience of the consumer wanting to be comfortable at home, in my opinion, due to the comforts of the pandemic. So much that people don't want to go sit at the cubicle anymore at their job. They want to work at home because they found something in being home. And with some of these releases of the entertainment industry being home based and people not going places, is this going to affect the future of this company, or are we going to slowly crawl out of the shell of being a temporary introvert and staying in the house to going back out enjoying summer? Are we going to have another outbreak of, you know, airborne illnesses that could happen because people are going out having more fun? We don't know. What are going to be the future prospects this company may produce in their earnings call, or the information that they may say that could affect whether or not this could be a, strong move to the upside that everyone is waiting for, or could this be the catalyst for the complete close of that gap, and then it bursts forward because you get bad news, and all of a sudden it hits a certain number, and then boom, it's just goes straight up in the air after hours, because this is after market, you guys. And you're like, man, they faked me out. Or it could be great news, and it runs up to maybe $7, maybe to $10, maybe to $17, $23. Or it could be bad news, and it could drop to $1.94, or drop to $1.70, or drop to 5 cents. We don't know. We don't know. But I'm not going to go against the individuals who are saying, hey, this is possibly setting up for a squeeze, because we clearly can see something is going on in this area. Let's again. I got a signal to buy a call way back in January the 9th. And I got a little window here saying, hey, there's some money possibly sitting here. But I also have to be mindful of areas where I have to get out of these trades, that things could go wrong. And there's a lot that can be closed down here as well. Like I said, I'm not paying attention to these negative numbers here, but I have an order block right here. See this right here? I got an order block. But I also got things up here saying, hey, it can go up here. You probably need to be prepared either way. That's what I have a sibling, he trades calls and he trades puts. This is technically a stock that you technically could just buy without even worrying about options. Like let's think about it. If you would have bought this at $1.94 and you bought 100 contracts, for what's that? 3,000, right at, well, okay, y'all, I can't do math anymore. $1.94 times 100. Move your decimal, okay? 194. $194, you could have bought 100 contracts back in the day when this was at $1.94, and it did go up, okay, to that 72.62. So that was a good move without you even worrying about some daggone options. And then if you want to squeeze this thing and get in a short and just say boom, I mean, look how much somebody collected over time shorting this stock. And but of course, if you get in this stock and you buy it, you just have to understand this much, okay? You have plenty, and I mean plenty of potential for this to go up over time. And you have just the same amount of, I'm not going to say the same amount of chance, but I'm saying there is still a possibility that this could close this gap before it runs, because you got to look at what happened here, okay? We saw a low here going back to this area. This was $1.93. Okay, and this was back in 2020, 3/16/2020. This got here at $1 and trying to line it up, looked like $1.85. It went all the way up to, looks like possibly $8 and some change. No. Well, that's what I'm saying. It looks like this. Let's see here. I didn't want to do that. I'm trying to see. Let me see. Okay, we was here, $1.93. Got to $7.29. Pull back. It goes low in the 370. Went up 768. A little past that. Pulled back again. Went a little lower. Kind of went back to this area. Went up again. Pulled back. And then it shot up. So could you possibly, since everybody wants to talk about this area, have you considered, you know I'm a PK kid, thinking about, have you considered my servant Job? Have you considered this happening before this happened? Have you considered that? And that's what I'm saying. Now, technically, a little bit of that happened over here. Technically, if you want to be honest about it, there's a possible run up, and then there's a pullback, and here's a possible run up. And is it possible to run back or to keep going? It pulled back a little bit as we saw in some of the lower time frames. So this happened over, gosh, that happened over the course of, let's see, 316. That happened from 316 all the way to January 25th of 21. So this little area here played with y'all a little bit from March the 16th all the way to of 2020 here. We don't know if that's going to be the case. We don't know. The earnings could expedite that process. It could expedite that process significantly. Or it may have nothing to do with it whatsoever. This may not even happen again. Because just because it has happened, just because this has happened in the past before this happened, does not necessarily mean that's going to happen again before this happens. That doesn't mean that has to happen. The circle has to happen before the square. It doesn't mean that. But if you want to keep it real, let's look at it. Okay? Let's just be honest. Let's look at it. Looks like it was trying to me. Are we going to see it go back up here? You know what I'm saying? It could run up to 917, and hey, y'all, that's $3 it could move. That's really a push forward. Okay, that's a push. That could happen, and that's good money for a person who possibly is in a call, for a person who bought 1,000 shares at $6 and it goes up $3. That's £3 added back to your life. So this is depending on how you play these games, you guys. From the person who shorted it from 914 back to here, to the person who got in at 379 and took profit at 679, which is why it probably pulled back anyway. But again, we're looking at this is still an uptrend, and we still have to watch that this is a downtrend. We also have to watch in the past when it got to this area, it pulled back. So even if it gets to that 920, it has to break these areas. It has to break this next area. It has to break these next areas. And like I said, there's a lot of this up here that it has to go. Look at all that space it has to play. But we also have to respect that it has this area it can go to as well before it completely runs up just to close that gap. We don't know. I think some of these individuals are correct that there is a possibility of a squeeze here. But as we've seen, and as you have been, exposed to some of the other things that could happen, it's just that we're not going to just say, oh, that's not going to happen. And I'm not trying to cast doubt on whatever decision you make on your own life, because you're not going to blame me if you miss out on the run up. Because regardless, if you're not expecting it to go to 10, even if it closes this gap, it still has from here to here to get to. And you can still play options on this, Okay, you can play options. And what are they saying? They're expecting $1.33 move. So let's say you got a 7 call that you want to get into 27 cent. Let's look at the information on here regarding its history. Okay, because y'all know I like to see the historical analysis, not only of the stock, but some of the options that are also in accordance with this. Okay, we saw this was at a low of 23 cents on the 3rd of February. This went all the way to 65 cents based on a buy signal that some people saw that was an area that really could have, the stock could have ran from. But it got to 66 cents. The stock started pulling back around that time, and it traded all the way back down, almost back to the cost of 23 cents. And you can see, you can analyze various options just like you analyze the stock itself. You could possibly set an alert that says, let me know when this gets to 23 cents, because you might decide this was at 66 cents in the past. If I believe the stock is going to retrace, where it came from, then I'm going to get in this at 21 cents or above. You might try to say, I want to get at it a little lower. But you're going to set that and say, I want to see if this is going to drop on back down to 21 cents and get any cheaper. Because you might try to say, well, I believe that AMC may try to recover itself. So you're going to set your alerts for it. And be like, hey, I'm going to set this alert. And here it is right here. Market at or below 21 cents. It's currently at 28. And then you're going to add a note saying, get in a call if price breaks above 603 or what is that now? 608 or 615. You might say 615. You feel like it's gonna that's a strong area for it to be in a bull. So you can set your little alert right there. And let's say you're saying, hey, I don't really think that's the case. I'm sitting here doing Bank of America. You might say, nah, this is going back to daggone 5.5 at least. So you're trying to see where the lows are. So let's go see where the lows are. Where you might say, I want to be on the short side of the trade. You're looking at it from that perspective. You're thinking, hey, this is going to trade on back down because it may struggle a little bit getting past this or that. And you decide that you want to get into basically a put. Because this is taking so long here. See, 608, and I think it came from, I think what I had, I think this was at 5 days back. This came from, let's go back 2 days. Hold on, what did I do? Maybe this will work again. Not so lucky. Y'all feel free to y'all feel free to support my endeavor to get a better memory for my computer. Let's say you're saying, look, I think this is going to go back to 576 and maybe break on down to, let's just say, you might try to say 550. Let me see, I don't know if I can go back any further. But you might just do a 5.5 put, which I probably do a 6 since it dropped to 676. But you might want to be a little cheaper in that. So let's just see, what it was. If you're trying to do 5.5 instead, since you feel like it'll give you a little bit money, and you don't want to put but so much into that position, and you just want to scalp it and go make a few bucks. If you got 10 contracts, and it goes from 34 to 40. You want to say I made $40, and you want to risk $340 and make $40. That's between you and you. I don't personally like that risk reward ratio at all. But nonetheless, this was at a high of 50 cents, and the low was 31 cents, and it has since then gone up some and maybe trying to go back down. It could go cheaper, but there was the belief before it ran up, of course, from that previous day, that this could go to 50 cents. So technically 16 cents, and now 10, 340 to make 160. Still not the best ratio, but if you were to think about getting into a put because you feel like this is going to at least go back down to 5.76 and you didn't want to get a $6 put and you just wanted to do 5.5 even though the low was 5.76, I would personally scalp that call. But if you believe that the overall trend, however, for AMC is negative, just as if you felt like it was positive, you may decide to stay in that particular position. Nonetheless, let's go back 5 years, months, and just overall from that perspective to the extensiveness of trading, someone may look at this and say it's still in a downtrend. And someone else may say, yeah, overall, if you look at where it came from, you will be right. To go from 72 to $6 to $5.76 to $3.94 to anything lower than that. Yeah. And it can run up, you know that. But it also can continue on down and close that gap. But like I said, if you pay attention to what I pointed out to you, that was over the course of almost a year, not a full year. But that back and forth, up and down happened over the course almost a full year. But again, this does not have to happen before that happens or before this happens. You understand what I'm saying? That doesn't have to be the case because if this is in an uptrend, and it doesn't seem like it's going to pull back any further, then somebody might say, look, I don't want to miss that. But like I said before, we have to respect that on this long-term chart that this is below this, okay? And it has to prove itself because this is still a possibility. Like we're looking at this. It's telling me here, hey, this could go back down to $1.94, $1.91, even lower, or it can run. I just want you to look at it over time periods. But, some of my, various charts are saying, hey, you need to sell this. That's on the 15 minutes, so you can't pay that any attention. And then someone's saying, hey, on a monthly, this is positive, you know. But then my PSAR is saying, hey, this is bearish because it's looking at, look, this is like, boom, straight down to the side. But then, you have some neutrality in some areas as well that, hey, this is still making progress because of what? It didn't go back down to the absolute low. So if this could go either way, we just don't know. It's really, really up to what risk do you want to take, because trading is a risk. What I have understood with trading is I've tried to find the perfect indicator. I've tried to find the perfect combination of indicators. I've tried to pinpoint things exactly to the point, to the script, and just try to find something to be perfect. But the truth is, you can't. You are learning a probability of a probability. You are increasing your probability of the probability that this can happen or that can happen based on your individual analysis. I can talk to you till I'm blue in the face, and you're going to trade the way you are comfortable with. You're going to risk the money you are comfortable with. You're going to study the charts the way you want to study them. And that is important because if anything goes left or right, it's going to be on you. It's going to be your responsibility to analyze these charts, to find out indicators and various meanings of these various concepts in trading. It is important for you to paper trade. It is important for you to study and watch people trade to understand the true risk. It's important for you to understand that people have lost thousands of dollars trading in the stock market because there was one thing they were missing, or there was one thing they didn't pay attention to, and they needed to keep paper trading until they found out exactly what that was. Maybe you need to study support and resistance, supply and demand, imbalances, gaps, zigzag patterns, Elliott waves. Maybe you need to understand the average true range, the average daily range, the best moving averages to understand what the crossovers are. You need to understand certain oscillators. You may not even care about any of that. One of the most important things you probably need to study is a candle. And there are numerous types of candles in combination and in oscillation that you need to pay attention to. You need to understand what volume does with the stock. You need to understand what momentum does with the stock. You need to understand what various things happen with volatility with a stock, how earnings impacts a stock, how news impacts a stock, how squeezes impact the stock, how consolidation impacts the stock. All of this is stuff that you can write down and replay this video and write that list down and study hundreds of videos on each one of those topics. How do the indices and indexes and index funds, how does the news that you see regarding foreign affairs and domestic issues, the price of oil, the threat of war, how are all these things affecting this stock, affecting this stock market? You need to understand how the cost of eggs may affect the stock market, the cost of certain materials affect the stock market, whether or not this investor pulls out from this stock. Is there inside trading? Is there not inside trading? Blah, blah, blah. The list goes on. I'm just telling you, trading is not just about looking at somebody online and saying, hey, I'm going to do exactly what they're doing. There is a lot of background things that happen where these individuals are showing you the product of their hard work. But what they had to do to get there is a longer process. So just respect that. This is not financial advice. This is my opinion on this stock. As I told you before, and I'll say it again, you could very well be setting yourself up for the biggest move ever in the stock. And we remember how this stock made such headlines a long time ago. This stock made headlines a long time ago. A few other stocks made headlines a long time ago. And we also know that some of these stocks are in the news, and the news is just blah blah blah. And sometimes we get some stocks mixed up with the other because there's so many. But the truth is, these analysts are looking at important information. They're looking at what happened around the last time this stock was in this area. Now, I can see this in a reverse. I can say, well, hey, it seemed like to me they tried to go back up like they did in the past, and it didn't work out. And it seems like to me it could be headed on back down to the $1.91 area. And if it misses earnings, could it just drop there? Or this could be the complete setup of a lifetime where they're saying, oh, look at them. They're probably thinking this thing going to trade on down. And they get it so cheap, maybe even down to that $1.91, maybe down to a 94 cent, 50 cent, and then boom, it trades up $10, or it trades up to $5, or $3, or even $2.50. It's still a squeeze, okay? So what I'm telling you is create your alerts, okay? You can come up here and say, I need to know if price goes past $6.74. There you go. At or above. If so, in your opinion, if you want to get in a call or begin to buy shares. Okay, that might be what you decide to do if it gets back to that 674. But like I said, you might say, let me look at this thing. Okay, it said if this thing get below let's say what was that thing? 579? Something like that. Let's just do 573. You might say if at or below 573, short shares. I say I'm gonna short some shares or buy me a daggone put. But guess what you still got to do? You still have to pay attention. You still have to say, well, how long am I going to stay in that put? How long am I going to stay in that call? Because you still have to pay attention on the higher time frame. You know, what's the best entry and what's the best exit? Okay, so that's why you can't just get in something. We have these alerts on this chart. Okay, I put the alerts, on the big time frame, but as you can see, the things you do at the higher time frame, depending on where they are, will show up. So, if in your opinion, you might say, hey, if this hits 674, I'm definitely gonna get in a long term call. But somebody else is going to say, but I'm the type of person, it has to break 674 and retest that area, then I'll get into a call. But somebody else might say, I don't want to miss it. They may literally, if it's going up in the uptrend and they're expecting to go up in the uptrend, they will get in that position here and ride it all the way to that area and past that. And they may wait for that break and retest for it to go up, or it can break and come back down, or not get to it, go up a little bit and pull back, or it can get to it, pull back, find support, and keep running. Or they may look and say, hey, this thing can't even get past, 632. It can't get past 645. This thing want to break on down and keep going and keep on going and keep on going and keep on going, and you got your mark at 573, and you're like, hey, I'm getting in the put at least to 528 from 574. That's a 50-cent move. If you get in the put at, I think I had 5.5, you can make a little bit of change. Who knows? But I respect that both of these instances can happen. I respect that a put or call or short or shorting a stock or getting in the stocks to run for the run up. These are all possibilities, okay? Like I said, everybody can't handle this right here. I don't even have to have this on my chart. I honestly get rid of it. It's no big deal because it is a lot going on my chart or whatever. And there are a couple of them that have this up there. But and all of that, being able to, you know, come up here on my chart and change these features and stuff like this, that was based on, various abilities to understand properties and stuff in, trading. I didn't just learn this overnight. This was honestly um, something that you have to practice, to see how different my chart looks already. But just because I took that off, I don't have to have it. It was just letting me know, hey, this is in an uptrend. Let me know when it went to a downtrend, it went to an uptrend, but it gives me arrows, it gives me pointers, and it's not what I completely utilize 100% to get in a call or a put. There are a lot of things I pay attention to. Clearly, the moving averages. Clearly, my other areas here, selling and buying. Then, of course, I got my PSAR. It's telling me at this point to stay in an uptrend. If I would have listened to it, and this is on the 10-minute chart over the course of 3 days, I could have got in a call all the way here and stayed in the trade. Even if it pulled back, it got to what, 23.6%, pulled back to 61.8%, which is give or take near between 50 and 61.8, which is where most of these things do try to pull back. And then it goes back up, didn't go all the way back down to this 5.24. So it was clearly on the uptrend. Now it did break down here a little bit and it went back up, but I was still in the uptrend overall. So and you can add auto trend lines and stuff up here if you like. I had targets as well. This is my short target. I'm trying to find my long target. It may be further out and I just can't see it yet. I don't see it, but it's somewhere near. But nonetheless, my ATR was telling me this could break down, so of course I have a lot of things going on. Normally don't have fibs, but I just wanted to let you see how that worked. And just like that, my chart looks better. So I don't have all the stuff on my chart all the time. After a while, once I see something is affecting my visibility on the chart, I weigh my pros and cons to keep it on the chart, and then I get rid of it when it no longer suits me. Other thing you probably need to pay attention to is learning about the different pivots. I have my pivot set to 30, but I can have them at 20 just to have more of them. And you can use these pivots for breakouts. So let's look at it here. I have multiple things going on, but this was an area it pulled back. Somebody else say, okay, once it does that, I can get in a call right here and play the pivot. It breaks out. Okay, blue. Then you pull back some, but it didn't break on down. I can still stay in it. I was still, like I said, in a call here. But as you can see, this is something that is ongoing. Got to this area, it broke through. Then it broke down. Then it broke through it again. There was an order block there. So, like I said, there are a lot of things that I utilize to help me analyze charts. And again, that comes through studying and practicing. But like I said, this is AMC. And you kind of have to get to a place where you are aware of how to utilize these platforms, how to utilize these various indicators, what they understand, what they make sense of. I have things that tell me about breakdowns and breakups and false breakdowns. Um, like I said, these are not any of my indicators. I did research and I found them. So that's something that you should look into. There's a lot of research in this stuff. It is not an easy, simplified thing. And down here, I have my little order block parts here yellow, but I think I might need to lighten them up to be something a little different, maybe orange. So I can just see them. Yeah, I can see that a little better. Um, and those are the lows. And so if you look at whether or not a stock is going to break down, we have an area here where this could break down to this pivot area, okay, which is at 609 because it really came, well, actually right here. This is 603. If this breaks down in this area, okay, it has two things that can happen. It has been known for it to go up in price, but it still can get to this area. There's an order block here. It could get to this area. It could get to this area. Okay. That's how you play the game. Some people just play support and resistance. Some people just and I can put, support and resistance on my chart. Sometimes it coincides with some of my indicators, and sometimes it may clash with my indicators. So from what I can see, let me see what it looks like. Okay, let's see. I don't like it. I don't like it on my chart. It seemed like it changed my chart, so I'm just gonna take it off, and I'll put some of my other things that I've manipulated, what have you. And I might just do 5 support and resistance areas so that I don't want all these markings on my chart. But if you can see here, it's showing you where there was resistance. I have it up to 7. I can go in the code and change it around a bit. And old support or resistance can be support, and vice versa. Support can be resistance, resistance can be support. So we have resistance here, resistance here, resistance here, resistance here, and resistance here. So you can play each of these areas where the resistance was as your levels, if that's what you want to do. And we have the support here where it was at the bottom. And so you can look at price and say you got out here, you got out here, here, this was support, and it broke down from that support. So, if I would just wanted to use less supply resistances, I could just do 3, okay? And just to have less markings on my chart and just to look at it, here we have more information, but we have that going more so into the after hours. And look at that. 1. Resistance here, support there, support there. So this was an old support, new resistance, another support, because it seemed like it kind of went a little lower maybe. So maybe so. But as you can see, it went right back to it. Let's see, can I just add, maybe make this 15. I'm on the 10-minute chart. On the minute chart, this will look a little different, okay? So, still same thing. So let me look at it on a 5-minute chart. There may be more instances of it. Yeah, it is. So, like I said, you have to know what you're doing with this stuff for it to be used in the right way. Because I could have played this from this support to that resistance all the way here. There was some resistance from the past where it went down, went up, pulled back down, went up, pulled back down. So it's on a downtrend here. But we can even go back in time and look here where this literally broke above in the past. But it got here and decided that it wasn't, and it traded on down. So you still could go back in time and look at this stuff and see how much of a help it's going to be to you. And again, when we look at these pivots, that's why I kind of like to have a little bit more pivots because of what can happen. What can happen in the middle or in between. So having pivots on your chart and having supply and resistance on your chart, it does help. Some people may not see it that way, but if you see here, this was a pivot in the past, and look where we are. There's an area here where this could have broken up, but instead it just stopped here and broke on down. And in the past, this has been an area where it did go up, but in this little future here, it did go up a little bit, but it peeled back in congruence kind of with this area. So, like I said, it just really depends on how you want to chart. I personally like to have X amount of information on my chart. Um, Trying to see. Yeah, that's gonna give me more than I want. You do want to keep your chart clean as possible so you can see price action. But there are some things that the indicators can point out to you that you may normally not see. So indicators are more of a, they're more of a, I would say, um, they're more of a consensus of what you have seen with your price action, more than they're going to tell you actually everything. For example, this is telling me to sell resistance here because this is kind of where it broke out in price. So it waited all the way here to tell me to sell. But my common sense tells me, okay, this broke up from here, it plateaued here, and pretty much there was some consolidation here. It did not break up back to that 677. It started to have a higher low. So one thing that you can look at here is the higher lows that some people may have on their chart. I'm trying to find where my I don't think I have it up here. I probably don't because I normally have this other um setting on my chart and it gives me high low bubbles. See here. Okay. Also tells me what candles are. So this is where you start getting a lot of stuff on your chart, but I just want to zoom in and let you see. It tells me this is a shooting star and this is a higher high, okay? But what you don't understand is that this also was telling me that since this price could not go any higher and it refused to, that it was going to essentially trade down until it stopped trading down. Okay, so that is one reason why you need to understand higher highs, lower lows, because it did make a higher high, but it failed to make another higher high. Okay, if you look at here, it got to 667, but it didn't get back to 677. And then when it pulled back and tried to go up again, it got to 658. And then it pulled back and tried to get up again and only got to 656 and so on and so forth. So it was showing you it was a downtrend. I would not have waited to get into a put here. Even though that was telling me to do that way over here, I knew based off of trading that this was beginning to be a downtrend because some people, they draw trend lines. And they'll say, well, I'm going to get in right here and it should be doing this, going on up. But instead, it broke down. So they would say, oh no, this is going down. And there's a study, that you can get that will draw your trend lines for you. They're out there. You can, make your settings for yourself. I may just put 2 up here, but depending on that trend line, it'll tell you whether or not it's above or below a trend. Now, me personally, I drive my own trend lines because to me, if I drew a trend line here, it's below the trend for me. Okay, if this was gonna go back up, like I got in here at the bottom, if this was gonna go back up, then I felt like it would have broke up above this, but instead it kept breaking down. But their auto trend lines, they're saying, hey, this is still in the uptrend. I don't believe it's above current trend. You see what I'm saying? Now, if I go in here and I change this to 4 trend lines, that's where you're going to start seeing, look, it's got a trend line here, got a trend line there, got a trend line right there. I'm trying to see where the other one is. Got 1, 2, 3. Find the other one now. 4. Okay, that one right there. I don't see where it's technically above it, but I guess with this one, they're saying it's kind of above it. I don't agree with that analysis because it may technically be above it, but for me, it's not in the uptrend, it's in the downtrend. But I understand what they're saying, I understand what they're trying to do. But that's why you can't rely completely on computers to, show you everything. And one thing you need to also do when you're dealing with um, various properties, um, this show bubble has your charts pushed up a little bit because it's trying to line exactly with the area that it is highlighting. So on your charts, you know, if you want to just see a quick um, area like where is the price at, where is this at, where is that at, a lot of people do have their bubbles checked or whatever, but that holds your chart hostage. So you have to uncheck show bubble. I mean, you can literally click on your the line to see exactly where something is, but depending on what you got going on. For example, some of these things don't even pop up on my chart. Some of them do, and I mainly go through and I uncheck these bubbles, the show bubble, because it holds your chart hostage from showing it like without it being so squished together. A lot of people have problems with their chart because they will have it on auto zoom, right? And then they'll have fit studies in. If you do that, it'll cramp your chart. Now check the box and it uncramps it. Okay. Now I'm going to remove my, support and resistance stuff because that too is holding my chart hostage. So, um, I'm just going to remove that. I'm going to remove my ATR. And as you can see, my chart is still pretty clean. This is the last area that needs to be unchecked. I believe that is holding my chart hostage. So when you are trading, you want to see a lot of information because you may be making split-second decisions. So you don't want your chart so cramped up that you got to keep clicking on this and clicking on that just to see what's going on, and just go through, look at your various settings on your charts and stuff to see is there anything that could be holding my chart hostage, and you may not think it's anything, but I promise you, you can just see my chart just being more clear, because I am moving these various things, these unchecking these show bubble areas off of my chart. Okay, so you can set your thing up to have that as a default. So whenever you put that study on another chart, it will clear it out, and you won't have to worry about going through there doing that. But no one knows if that's going to be the case. But nonetheless, as you can see, my chart looks a little better. Still has a lot going on. Let me see if this is. Oh, took that off myself. Okay, so that's enough. I mean, at this point, I've made my point. Nonetheless, I lied. Let me see if this is I think this is, yeah. This is causing a little bit of strangulation on the chart as well. Okay, so boom, boom, boom. All right. So we've cleared that up some. We saw a squeeze here. We saw a breakdown. This is in the aftermarket, the gray areas. Okay, but as you can see, there was evidence that this was going to pull back. It pretty much went almost to where it came from. Okay, we see people are trying to bid 14 and someone's asking for 17. So if you pay attention to that, where is that going? Okay, let's just look at this pre-market information. This is going back to what? They are asking for it to go back to what? This pivot. This was a pivot that was made at, what's that, 555? Is that what that is? Yeah. So it pulled all the way down here, 608, went back up to 616, went back here, didn't go all the way back down, and it's trying to go back up. And they want it to go to the 617. So where else can it go after that 617? We have a 619, which is very close. So that's a good area of gap that it could close. But they were trying to play that here. So if you play that from here, then you kind of got in a little early. You made a little bit of money. But they're trying to get it to 617. The next area it could go to is 618, 619, of course. This is really probably the next level someone may want to visit, because that would be 630. Then after that, we clearly have this pivot of 6.5. And then we have this area of 667. And then the ultimate boom shakalaka would be the 677. So you can play that up or play it down. You can say, well, this could go to 611. This could go to 608, where it came from. This could go back to 603, where it really kind of sort of came from. Then, okay, my bad, you guys. 1 second. All it takes is to slip off the thing. Back to it, back to it. Alright, this could go here to 603. Then it could go to here. Let's see what we got here. 593. You go to 584. You could go to 569. You could go to 565. It could go all the way back down. 523. Close the gaps. Okay? So, like I said, play the way you need to. Now let's look at this on a 10-day, 30-minute chart so you can see the trajectory of this. Okay? Broke out from here. Alright, it broke out there. Broke out there. It broke down. Got past that and broke on down. Got to here. Retested that area. Okay? Is it going to break down to here? Is it going to break down here? What did it do the last time we got to this area? Okay? pull back. We also see somewhere in the past it actually broke out from that area, but it could break on back down. There's a possible target of 537. There's a possible target of 497. But we still see that these are places where it has been. So that's why I said you got just as much as downside as you got the up. Okay? So do 30 days, 30 minutes. Okay? See that right there? See that, don't you? That's what we try to get you all to understand. These prices, most of the time, can go back exactly where they came from and then go over just a bit. Because here, it looked as if it was at 657. And here, it's at 676. So, it very well could go back to this area or this area. No one really knows. But got to respect that this is a what? One top, two top. Really. Y'all forgive me, I just had a thought. Just recently lost someone in our family that was pretty much a matriarch. She was 96 years old, going on 97. And I just thought about it again. We just penalized her yesterday. And I just thought about it again. So. Anyway, guys, I'm going to wrap this up. And I want you to be mindful of the various plays that can exist. These areas are here, you guys. These areas are up here. It can go either way. That concludes this. Remember, this is not financial advice. This is my analysis of this stock, AMC. It can break up or it can close the gap even more down. You just have to pay attention to it and be prepared either way. So just stay focused. Set alerts if you need to. See what others are showing on their YouTube channels as well, what new information they may have. Some people really do keep up with this, but like I said, you guys, I can see this, or somebody might see, something else. They're looking at it from here, right? They're looking at, hey, you see this, but hey, I see that. And I see 873 possibly, or I see a 387. I mean, it just really depends on, how you want to play the game. But as you can see, it's important to go out in the past just to kind of see what's really going on here, because if this fails to break above that 677, now what? Okay, but then if it does, like you see, you have a lot that can happen here. Okay, all right, you guys, I'm gonna get off here. Just in my emotions right now. Y'all take care.